Hi, and welcome to the Access Direct Opening Bell, your essential pre-market podcast. In just minutes, get key global updates, overnight trends, and market-moving factors that set the tone for the day. Whether you're a seasoned trader or just someone tracking the markets, this is your go-to briefing to stay ahead at all times. So let's dive straight in.
Good morning on a Wednesday, and we will start with US stocks, which ended mixed as investors readied for an end to the government shutdown. The S&P 500 closed 0.2% higher at 6,847, while the Nasdaq 100 fell 0.3%. Meanwhile, strategists are of the view that a reopening would release more liquidity into the markets, which could support stocks for more gains towards year-end. Elsewhere, data showed that the labor market continues to soften, which is adding to bets that the Fed will cut rates again when it meets next month. In related movers, the VIX dropped 1.8%, the dollar index fell for the fifth day, and the 10-year treasury yield softened. Meanwhile, bullion rose for a third day and closed at $4,127 an ounce, despite the intraday sell-off, while Brent closed above $65 a barrel, even as concerns of excess supply grew. Speaking of the rupee, the currency finished higher at 88.57 on optimism over improving trade relations after President Trump said that India and the US are getting pretty close to a trade deal. On to domestic stock markets now, and the Nifty ended 120 points up at 25,695 after suffering an initial setback. The India VIX rose 1.5%. Small caps and mid caps finished mixed. On the NSE 500, advancers slightly outdid decliners. 7 of the 12 NSE sectors advanced, with IT stocks becoming the top gainers for the second straight session as they rose 1.2%. PSU banks were the top losers as they dropped 0.4%. Indigo was the biggest gainer on the Nifty as it rose 3.5%, while Bajaj Finance was the biggest loser as it fell 7.4%. Technically speaking, yesterday's candle had a long lower shadow, which shows strong demand in the area of the day's lows. With support at 25,318 intact, bulls will be targeting the critical 25,744 to 25,900 area. What happens here will be critical for the near-term direction. Elsewhere, provisional data showed that foreigners withdrew 803 crores yesterday. The month-to-date outflow is now over 6,550 crores. On to derivatives, and the Nifty's put-call ratio went from 0.99 to 1.09, while the Bank Nifty's was steady at 0.96. Put addition exceeded call addition for a third day, and implied volatility fell over 100 basis points, which means investors continue to bet on an extension of the rebound. For options expiring on 18 November, resistance sits between 25,800 and 26,000, while support lies inside the 25,500 and 25,600 area. Elsewhere, 1% out of the money calls fell, while similar distance puts rose a little, and that means vol traders turned cautious. Speaking positioning, foreigners were positive along with proprietary traders, while retail investors turned negative. Meanwhile, the index futures net short position of foreigners climbed by another 3,000 contracts to 159,000 contracts as positioning continues to turn bearish. Looking forward to the day, the GIFT Nifty was up 135 points at 7 a.m. Asian stocks were trading higher, while S&P 500 futures were up about 0.1%. Coming to stocks, Poonawalla, Tata Communications and Anand Rathi Wealth were at horizontal support, while Dr. Reddy's and Jio Financial were at horizontal resistance. Elsewhere, Honasa and Tata Consumer Products were at trendline support, while Tata Consultancy Services and India Mart were at trendline resistance. Speaking NSE 500 breadth, 46% of stocks were above their 50 and 100-day moving averages, while 59% were above their 200-day averages. CPI numbers are due from India later today. That is a wrap on the day's podcast. Please note that this podcast serves solely for informational purposes and should not be considered financial advice of any kind. For a comprehensive disclaimer, please visit our website. Thank you, and we will see you tomorrow at the same time. Have a great day.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.